Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Thursday, June 25th. We got quite a few important data come out today. And then tomorrow we'll have some important data as well. So let's jump right into it. The first item here on Thursday, so we get every week, is initial jobless claims. Last week's report came in at 1.51 million, and this week's forecast is coming for 1.3 million, and it came in at 1.48 million. So the good news is obviously it's trending a little bit lower, but not quite to the pace that we would like. So we're still seeing a lot of people applying for unemployment, still pretty heavy number. We are underneath the 1.5 million now, but again, not the greatest. Still not at the pace we'd like to see that go. Next on the list is durable goods orders for the month of May. So back in April, it was month over month, it was minus 18%, 18.1%. Forecast for May, from April to May, was 10.9%, and they exceeded that to 15.8%. So we had a bit of a uptick from there. Now, when you take up big ticket items like transportation, for April, we had minus 8.2% drop, and then into May, we came in up 4%. So again, that's how much the big ticket items can obscure these numbers here. Last but not least, one of the items we've been kind of looking at, but is being disregarded because it's kind of in the past, Q1. We're going to be looking now towards Q2, see how really bad that was affected, since that was the bulk of the pandemic affliction. So again, it basically was 5% in the whole, and forecasts and came in at minus 5%. So first quarter GDP, obviously a very disappointment. It dropped 5%. So I would have to say definitely we would be in, if you didn't know it now, we're in a, not depression, but a recession. So let's move ahead. Let's jump over to the next one. So right now, stocks started off in the morning pretty high. They started off because there was a report that came out that bank regulators plan to loosen restrictions on banks, kind of reversing or loosening some of the Volcker rule that was applied after the Great Recession we just had. And what they're going to do is allow them to make large investments in venture capitals and stuff, and not have to set aside cash for dividends. That they figure that will allow them to have more cash on hand and more in the industry. So that way they don't more money, and maybe as much as in the billions in the industry. Also later today, they're talking about the bank stress test will be released around 4:30 East Coast time, so about 1:30 our time on the West Coast here. A bank stress test. They're going to be checking it for a few things. One, for V recovery, for U recovery, W recovery. They're going to be checking different ways, making sure how the banks are faring in this. So I'm sure a lot of people will be wanting to hear how the banks are handling this current pandemic situation. Let's see how this is playing out in the bond market. Bond market's doing okay. Yesterday we kind of broke up a bit more. We ended up closing up about 9 basis points. We started slightly higher. Right now we're down about 2 basis points from when we left off yesterday. So as you can see, down about 2 basis points. Not quite enough to make any change to the pricing, but we're pretty close to have some improvement in our pricing because of yesterday's late push in the day. We could potentially get that later today, and maybe we'll see some slight improvement in our pricing. And so let's take a look how yields are going. Yields again got pushed way below after starting the day below the 50-day moving average and working its way all the way up to 25. It came all the way back. It lost all those gains it had all the way down to below the 50-day moving average. And right now we are sitting at about 0.67% right now. And as you can see, it's kind of testing that 50-day again and the next level below it with these little wicks here on the candles here. So mortgage rates, again, remain pretty much unchanged. You might have a slight improvement depending on the lenders, but again, for the most part, unchanged. If you guys are in California looking to buy or refinance, please reach out. We'd love to be able to talk to you on how we can help you guys out with your rate of term refinance, taking cash out, different solutions that we offer in terms of helping you try to plan for a college education, if you want to become an investor, helping you make some plans on those, different avenues of that nature. So just best way to reach me is direct message me or email me, which you can find on this page in the red, or if you found this on a social media site, you can direct message me from there. I do respond a little quicker from email as I receive those. I seem to get those a little bit quicker than I do the direct messages. You guys have a great rest of your day. Thanks so much for watching. We'll look forward to see you guys in tomorrow's video. Bye-bye.